Good morning, Steve here in Chicago with the results of the USDA January crop report. Well, we always say the USDA has a few surprises for us, and so the big surprise is that they lowered this last year's soybean crop 54 million bushels, and they lowered the carryout 60 million bushels to 420. So we got soybean prices up about 15 cents on the March. Again, the market is short, psychologically thinking that prices were going to go lower given a good South American crop. And USDA did raise the Brazilian crop to 104 million tons from 102. Also, the USDA estimated the quarterly stocks of beans at 28.95. That's down 40 million bushels from the average trade guess. In the corn, they really didn't do too much. They lowered the crop in the corn here in the United States from last year by 78 million bushels. They did lower feed usage 50 and raise ethanol 25, and they lower the carryout 48 million bushels. They estimated the D1 stocks for corn about 84 million bushels above the average trade guess. Over in the wheat acres were only 32.4 million acres. The average guess was 34.1, and last year was 36.1. So we've got wheat prices up about 4 cents, corn down about 3 cents, and the stocks on December 1, 2073 up about 20 million bushels from the average trade guess. So if we put all this in a pile and say what's going to happen, first of all, you're going to have to get a few of the psychological shorts out of the bean market and go back and test the higher end of the range. Then we'll watch South American weather. There's plenty of beans down in South America to limit the upside in prices. As far as corn is concerned, we'll probably stay in this trading range. We've got a big supply and we've got big demand. As far as wheat is concerned, we're going to have to look down the road and probably try to put a little premium, despite the rains that are coming in the southern plains, back onto the marketplace because of these lower acres. Now, for our Canada friends, we've seen the Winnipeg canola futures follow the soybean and soybean oil prices lower over the last few weeks. We noted that the Chinese are not big buyers of canola, probably will not be buyers going into their holiday. As far as the Canadian dollar is concerned, you've got two things pulling and pushing against it. You would think that talk of higher commodity prices would help the Canadian dollar, but the fact that the U.S. Fed may raise rates faster than the Bank of Canada could limit the upside. So let's just call the Canadian dollar sideways. So as always, USDA had some surprises for us. We'll see how high is beans. We'll see if we put a premium in the wheat market because of the lower acres. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.